All right, we are ready to go.
All right. Well, good afternoon, folks. It's afternoon here on December 8th, 2022 in Frisco, Texas. I'm joined this afternoon by my preferred lender, Richard Seri, owner of Alliance Mortgage Group here in Frisco, Texas. Myself, I'm Michael Brownstead, broker owner of Brownstead Real Estate LLC here in Frisco, Texas. And of course, Richard can do loan mortgages throughout the entire state. I can sell real estate throughout the entire state. However, I kind of stick geographically to where I'm more competent, i.e. the Dallas-Fort Worth area here. So we're always here to help you out, answer any questions you may have, or if you're just doing something in the real estate process, the pre-approval process, the home search process, and you just have some basic questions or whatever, we're here to always help. As long as you're not represented by another real estate broker, you can call me anytime. And of course, you can call Rich anytime. So today we just really want to talk, keep it basic first and talk about the basic pre-approval process. Your first step in purchasing a home, if you're going to do any type of financing. Of course, if you're paying cash, obviously you don't need a pre-approval letter. You'll probably need just proof of funds. But yeah, basic steps in the pre-approval process, what to expect, why it's important, and so forth. And I'll tell you why it's important most of all. Well, one of the reasons why it's important is when you make an offer on a property, whether it's a new construction home being sold by a builder, of course, Highland Homes, Trees Homes, whoever it may be, they're going to want to see a pre-approval letter, whether it's through their preferred lender or the buyer's preferred lender. Also, pre-existing purchases, when you make an offer on a property, a lot of times the seller and listing agent are going to want to see a copy of a pre-approval letter to go along with that offer. And really, it's a big picture. It's a picture really of your financial status, kind of what you can afford. And I'll let Rich go into that. So given that, Rich, you want to talk about what exactly is a pre-approval letter and what goes into it, what documents will buyers typically have to upload and send to you?
Absolutely. And you forgot one thing about yourself is that you're a veteran. So thank you for your service. So Michael does represent veterans in the community as well. And he's an advocate for those buyers. So there's a few different ways we get a person qualified. The first and foremost is we need to take a complete loan application. We need to have a discussion with the client and learn the story of that buyer, so to speak, and get all the pieces of the puzzle to document that story. So we're going to start with a loan application. We're going to pull that customer's credit. There's going to be income documents that we're going to have to get from the customer up front. So if they're a wage earner, we're going to need pay stubs, W-2s for the last 2 years. Sometimes we'll only need the most recent W-2, depending on what the findings tell us, but we're going to ask for the last 2 years W-2s. If they're a current homeowner, we're going to need a current mortgage statement to show what that payment is on the property that they are currently possibly retaining, to put that figure into a ratio. We're going to need assets. We're going to need all assets for the documents or the monies they're going to use for this transaction and for reserves. There's circumstances where we're going to ask for any retirement income in case we do need additional reserves. If they have multiple properties, we'll use those reserve dollars for the PITI that might be required. Now, if we're doing a VA loan, though, there's an additional step that you most definitely want to get up front, and that's that certificate of eligibility. That is the golden ticket for a veteran to purchase using VA, is you have to have that. That's going to tell us a few things on that form. It's going to tell us, do they have full entitlement or any entitlement dollars if they've used the VA benefit before in the past and they don't have, or they haven't restored that, or they're going to maintain and use it again. If they're exempt from the funding fee, and if they have any service-connected disability, because if they do 10% or more, the funding fee is waived.
Perfect. It's great information there. Another thing I'd like to point out too is that, there are so many lenders out there. You have your big banks out there. I'm not going to say any names out there, but I like to call them your big banks, your big boxes, if you will, kind of like your big box real estate brokers is out there. And this is really something important for folks who are trying to decide, well, which mortgage lender do I want to talk to? Which one should I go with? Well, one of the things you want to do, because I'm really picky, as Rich knows, is, I don't want to bug people after normal business hours. I don't want to bug people on weekends. However, if there's a situation to where you kind of can't wait till the next business day, I like to know that a lender is typically going to be accessible within reason after business hours or on the weekends. Now, I'm not talking midnight by any means, but if I need to reach them at 6, 7 p.m. or
Yep.
2 p.m. on a Saturday
Or
or
sometimes
Sunday.
later. I've taken calls up to 9:30. So,
That's right. That's right.
Yeah.
Because when we as real estate professionals or our clients, the buyers, have questions, I mean, it's usually a pressing question we need to get answered, or it might be a situation to where something's going on in the transaction where we need immediate assistance with that, or an update for that matter as well. And we really don't have time to wait until 10 a.m. on Monday when it's a really hot issue that's possibly a deal breaker as well too. So having a lender who's really accessible within reason is very important. And one, of course, who you can pick up the phone, you can call them, you can email them, and they're generally pretty responsive. And when you call them, you're not getting some 800 number where you're talking to a different person each time. You have to explain to somebody differently what the situation is, and then they have to wait till that other person gets back into the office because they're on vacation and they only have access to the file, and just all kinds of things out there that are just that are just terrible in the mortgage process. And as we know, during the home buying process, the mortgage process, there are some timelines in there as well too that have to be met. That we as real estate professionals and lenders have to track. And if nobody's tracking that, a deal can fall apart, and it could cost some people some money, which we don't want to see. So doing your due diligence and picking the right lender is very, very important in my opinion. Of course, I've been to many, many lenders over the years, and I end up with Rich because Rich operates exactly how I need him to operate. He knows how I like to operate, and that's why we work great together. And I continually recommend him out to all my clients out there. Rich, anything else you want to add on that?
Yeah, one thing I wanted to add on the pre-qual documentation list that I forgot. If you're self-employed, depending on how you file your taxes, you're going to need the last 2 years filed tax returns. So if you're a C Corp, or not a C Corp, but an S Corp, so you're a sole proprietor, you should have the last 2 years tax returns filed for us to average the income. If you're a C Corp or an S Corp, you'll need business and personal tax returns provided to your lender to qualify the income, calculate the income, and make sure there's enough there to support the mortgage. Now, I've had a few situations too where I've talked to customers and they're great with doing the application, and then they say, well, are you going to pull my credit? A credit is going to be pulled. And the purpose of that is to, one, run the automation that we need to run, make sure we get an automated approval. If we don't, and we have to do a manual underwrite, if it's FHA or VA, we can try and do that for the customer. But it's important that we get a credit ran, because that's going to tell us, credit score currently, what debts we have, are there any derogatories, are there any red flags that we might need to address? And if you've got someone who's looking to purchase 3 or 6 months out, it's good to get that done now and put a plan in place to fix that challenge, talk about how we can get the score up even higher with a few pay downs on credit card debt, authorized user removal, authorized user add-on to piggyback on credit. So some people, they have the misconception of the multiple inquiries. Now, there's a difference. If there's multiple inquiries for credit card debt, for installment loans, for whatever outside debt of mortgage inquiry, that's going to probably hit your credit score a little bit. From a mortgage standpoint, if we pull it today and XYZ pulls it 2 weeks later, you're not going to get hit for that inquiry again, because it's within a certain time frame. And that time frame, I believe, is between 30 and 45 days. So if you've got a lender that you might want to, or borrower that you might want to cross qualify, that would give us an opportunity, or that other lender an opportunity to give you best terms, because that is part of your shopping process as a consumer, right? Is to shop your lender, and that gives you the affordability and time frame to do so.
I'm glad you mentioned that, especially the part where you identify any red flags that could be showstoppers or even deal killers, because the thing we don't want our clients to do is to receive a pre-approval letter, get all happy, run out, go find a home, put it under contract, do the home inspection, order their appraisal, and just a few days before closing, find out the deal is falling apart because there was something somewhere. For instance, maybe some unreported rental income that was never reported properly, and the whole deal falls apart. And all the money they spent up until that point is down the drain. And nobody's going to reimburse them for that home inspection that they did, losing their option fee, possibly even their earnest money as well too, if they exceeded the buyer approval timeline in the contract as well. So I
And more
think that's very
importantly,
important.
they aren't a homeowner. They don't get to buy that house, right? I mean, you have
Yes.
you have everything lined up for move in, get the movers coming, and then at the witching hour, you got a challenge that you may not be able to overcome because something got missed up front.
That's right.
I'm really old school. When I first started, we had to calculate everything ourselves. We didn't have a computer telling us how to do that or things of that sort. We had to actually manually calculate income, calculate those assets, self-employment. We had to do it all. I still do it that way. I don't have an underwriter look at it, or I have a third party look at it, only if it gets super complicated on income. So, when we're looking at stuff, I'm looking at what the underwriter is possibly going to question. And does the application make sense with the documentation that you provided? If not, we're gonna ask the appropriate questions, get some letter of explanations possibly, because from my standpoint, if we get everything done up front and we jog to the finish line, it makes that loan process much smoother for everybody involved.
Highly agreed. And, I want to point out too that I've had a couple clients in the past kind of get bent out of shape because either the lender or the underwriters wanted a letter from the borrower explaining just the situation, whatever it was. And my message to them was, look, if they didn't want to give you a loan, they would have already declined you. All right. So they want to help you. They want to give you a mortgage. There's just one little thing they have a question about. They just want you to reply in writing. So go ahead and do so, because, well, that's another thing too, is that people may think that, well, this lender declined me, which I don't agree with. So I'm going to run off to a different lender and they'll probably approve me. Well, that's not the case. And you know that as well.
Yeah. There's been situations there. I mean, you have to, if you were turned down or withdrawn from a lender, you as the consumer should know exactly why. And that why needs to go to the next lender to find a solution with another underwriter. And the difference between, my company being an independent mortgage broker and your big box lenders is when they tell you no, it stops there. If I tell you no with one particular lender, I have the opportunity of talking to another lender's underwriter. With VA, I have an opportunity to go to the regional loan center and get their take on the gray area of a guideline. So there's circumstances there where if someone tells you no, that's not the end all be all. There are other options out there and possible different solutions, another way of maybe structuring that loan, another way of overcoming that objection to get you to an approval status.
And another great point you made is that, you don't just push them off to the side as they're just another number. Had lenders do that in the past. Oh, they're not pre-approved. Well, what's the problem? What's the workaround? What can we do to work on their situation, help them work on their situation in order to get them to a point to get pre-approval and ultimately into a home, enjoy that home ownership, if you will. And you mentioned that earlier, of course, too, whether it be a credit score issue, an income level, or just a down payment issue, whatever the case may be. One thing I like to hit on too is that we know a lot of people, well, not a lot of people, but on occasion, we work with borrowers and buyers who are going to receive some monetary assistance in purchasing from a family member. And how does that work?
So if you do a gift, it depends on the financing that you're doing on how that needs to be documented. So on your conventional loan, you can have a gift for down payment. You can have a gift for closing costs, but we have to document that gift from the donor. Now, the donor can avoid some paperwork if they're just going to wire those gift dollars directly to title. If they do that, then we just need a gift letter signed by all parties and the receipt of title confirmation of the wire from the donor. If you're doing FHA, you have to do an additional step. They'll still want the donor statement, even though they're doing a wire directly to title. If the donor sends it to your borrower via wire or check, we then have to get documentation from the borrower that they've received it and show an activity statement that they have the funds available for closing. On VA, you just need a gift letter and confirmation titles received. Now, some lenders, some underwriters, they have the FHA, VA connection mindset, but they are two separate guideline rules. You may have some underwriters who push for that donor statement just to make sure that the wire is coming from the donor that's signed the gift letter. But if your wire confirmation shows the donor's information on it with name and account number, then you should be fine.
Okay. Now that gift letter, very important. We talk about that one as well too, because if we have a borrower who wants to go ask a family member, for instance, for some monetary assistance, from what I understand, correct me if I'm wrong, is that money, it specifically has to state in the letter, that money is not a loan, it's not paying back, that's money they're actually given. Is that correct?
Yeah, the gift letter has no repayment verbiage in it at all. It is a gift. The gift letter, it clearly states gift. Now, from a tax standpoint, you want to maybe visit with your CPA on what the max gift can be from a tax perspective. I think it's a little under 15 grand that you can do, but you'll want to consult your tax folks for that dollar amount that's changed.
Okay, perfect. Another thing you mentioned too is you talked about the having the borrower apply for a mortgage. Well, one of the reasons why I really love working with you, and it makes me feel comfortable along with my borrowers, is when they're in that early stage of just thinking about purchasing a home, a lot of times they have questions first. They don't want to just be sent to a link and automatically apply and start uploading documents. So I like the aspect you take from it. I connect them to you, whether it's email or text. You have that initial conversation, the icebreaker, if you will, kind of learn about them, kind of what their motivation is, kind of like I do, and just talk about their finances a little bit from a lending standpoint. And then, of course, if they want to proceed from there, of course, you send them the information so they can start the pre-approval process, the application process, if you will. Sure. And that's one thing I look for. Also, when I receive a pre-approval letter as a listing agent, I like to call the buyer's lender. And of course, there are things the lender cannot tell me, and I'm not going to ask those questions, which they cannot legally tell me either. But basically, I'll just call the lender and say, hey, this is Michael Brownstead Real Estate LLC. I've received a pre-approval letter on so-and-so. Can you tell me, the process you went through to get them pre-approved? And if they're not saying certain things that I'm looking for, then I don't feel comfortable about that pre-approval letter or even that lender. And if I don't feel comfortable, I'm sure as heck am not going to try to make my seller clients feel comfortable about that pre-approval letter either. And one of the biggest things I look for is, have they even applied for a mortgage? Have you pulled W-2s? Have you collected any documents? What kind of documents have you collected? That sort of thing. Now, sometimes I'll say they run it through desktop underwriting. You want to talk more about that?
Yeah, so desktop underwriting is the automation that Fannie and Freddie on conventional and FHA and VA that we run to avoid having to do a manual underwrite. So, but the problem with that is it's information in, information out, right? So I can manipulate DU or LP however I want. And an example would be if I didn't have assets from the customer because he hasn't provided, and I just put in $40,000 in assets. Well, that can make that DU finding look a little nicer than if he only had maybe 10 or the actual amount. So it's information in, information out. That's why when we run DU, we have a complete application, work history, 2-year job history, housing history, assets. We have the whole picture. We run the credit, we scrub the credit, we determine what loan product we're going to try and put that customer into. Conventional, FHA, USDA, well, no VA because we have the certificate of eligibility already. And then we're going to calculate the income and make sure that the income calculation from their documents match up with what they initially told me on that first phone call. Because you have some customers that would tell you, their net income versus their gross, or vice versa. And then we get that income statement or that pay stub, and they're not making as much as they told you, right? But if you run that DU without that documentation and everything's great, you issue that letter, you get under contract, and then we get the documents to submit, and we're like, well, hold on there, they're not making what they told me they're making. That's an issue, right? Just based on what you said, what they could lose. So the automation comes into play once all that documentation's in. We'll run that. And if we get an approved eligible, then it doesn't need a manual underwrite. We're going to have a list of conditions on that automation of what the underwriter is going to be looking for on how we're going to present that file to them to underwrite. And the same goes for your VA and your FHA, the same process. So it's almost, I'm going to say it's 100% guaranteed, because again, it's information in, information out. But if your loan officer's done the due diligence up front to run that to match your documentation, then you should be fine.
Perfect. And I like that in you as well, too, is that you do that due diligence. And I always tell my clients, hey, give Richard a good 2-3 good business days to work on this for you, to make sure he really has a chance to look at everything, big picture wise, to identify anything that we may need to fix before we proceed with the purchase process as well. And you definitely don't want to be, as a borrower, out there on a website where it says apply now and get pre-approved within minutes. Well, that's not a pre-approval letter, as we know. That's just somebody setting somebody else up for failure.
Well, those companies are automated for the perfect borrower, right? Your 740, 20% down, job time. I mean, all that, yes, can be automated, but for your other folks that may not fit that box, it needs a loan officer touch. Because I may have to call underwriting on a due diligence issue on overtime, bonus, job gap. I mean, there's a lot of other factors that come into play that I may have to do further due diligence to get confirmation from an underwriter to ensure that even though I have an automated approval, this minor issue on their job time or income isn't going to be an issue when it gets underwritten. Because my income calculation isn't the end all be all. It should be pretty darn close, but there could be something in there that the underwriter may not agree with.
Exactly. We've seen that before as well, too. And a lot of times it's, most cases, an easy fix, from what I understand. Is that correct?
It can be. I mean, our underwriters that I deal with, I have relationships with for years. So it's picking up the phone call, talking through what I have, and with the relationship that we have. She knows on the other line, I have a pretty good idea what I'm talking about and know the guidelines. And, if we come to I'm not sure, then she's going to take it up to whoever she needs to talk to and get us an actual answer. And again, if it's a VA loan and we're not sure, we're going to call the regional loan office and get an email to them with that scenario. They're going to reply back to how they tell us it needs to be worked up or handled. And then we're going to present that to the underwriter if it comes back with button heads on something.
Great stuff right there. And in great detail for our borrowers out there as well. Another thing I like to talk about too is that, it's from borrower standpoint, they don't want to just receive a pre-approval letter and say, okay, well, I'm pre-approved for $600,000 at this estimated interest rate, so on and so forth. This type of loan right here. I think what's even more important for a borrower out there, and I like that you do this, is, because if somebody's out there using a different lender, not to put anybody down, but if they receive that pre-approval letter and that's all they receive, and they contact me and I'll say, hey, are you pre-approved? Yeah, pre-approved for 600. Okay, great. Well, do you know what your estimated mortgage payment is going to be on a particular purchase price point? Well, no, they didn't tell me that. Well,
how do you know you can afford it, right?
Exactly. Yes, because you're right. I mean, there are so many expenses out there, as you know, aside from a car payment, aside from the mortgage payment, aside from a credit card payment, all the extracurricular activities for kids in schools with sports and so on and so forth. And a lot of people out there, they don't want to overextend themselves, even though they may be able to afford that payment. They might not want to afford that payment because they want to have funds left over for things to do with a family, trips, shopping, so on and so forth. So you want to talk more about, the things you'll do to kind of give them what their estimated payment might be at a certain price point, certain property, certain location, so on and so forth.
Yeah, absolutely. What I try and ingrain with my customers is, they'll tell me what the top end is. And then from that top end, I work down. And what's important is you've got a lot of people moving from other states to Texas, and there's payment shock when they hear how much those taxes are, right? They're not expecting property taxes to be what they are here. So when you get to actually working up the numbers and they now have a better taste in their mouth what that payment's going to be, they're going to then make decisions on if they want to lower, or if they feel like they can afford more, they're going to go higher if we can do higher. So, you know, from another lender standpoint, if they're just given a dollar amount, they're not doing the full due diligence. They're not really talking with that borrower and getting all the details of what their budget payment might be. They just want to hear what they're qualified for at what max amount. And then they're gonna, I guess, work it from there, I guess. I don't know, but it's important not only to do that, but when we run that automation, we got to make sure the ratios work, right? I mean, you got a $4,000 payment, you may not be able to afford that 4,000, even though I can give you 6. You can't do 4 because the property taxes are much higher here. So it's important to have that conversation as many times as you have to. So when it comes to properties, I always tell them before I hang up the phone with them, if there's properties that you or Mike have in mind that you want to go look at, send me the address. We'll work up an estimated payment on that home. I'm going to pull the taxes, give you an estimate on your homeowner's insurance, and let you know what that price point and that payment looks on that one particular house.
Absolutely. And that's part of the due diligence that I like that you do for us as well. Because of course, we definitely don't want to have a buyer purchase a home and then some months down the road have buyer's remorse because they've kind of overextended themselves, even though they can afford the payment, but they're still, kind of at that point right there. Well, I don't have a lot of extra income to do other things that I wanted to do. So yeah, great stuff in doing that and working up those different estimates, and not only just a property tax, but a lot of people don't realize that property insurance, your hazard insurance here in Texas can be a little bit higher than some other places. I had a client from California come in a couple of years ago, and he had sticker shock when he seen his estimate on his insurance. Said, "Mike, I'm not paying that." And I said, "Well, if you want to purchase a home, you're going to have insurance. Unless you pay cash for it, then you don't have to have insurance."
And just a personal example on how insurance has affected my payment is, I think we started out like at $1,800 a year, and now I think in the last 2 years is no claims has gone up because of all the claims in the entire state, right? So everyone's premium's gone up. I think I'm paying almost $2,700 a year now. So my insurance has just gradually gone up, and I shop it every year when I get the premium, but there's really nothing better than what I currently have. So, insurance just in general is going up.
That's right. And you're right. When those claims are made around in your area, typically affects everybody, whether you made a claim or not. And especially for your first time home buyer out there, they really have to realize that there's some cost associated with home ownership other than your mortgage out there. If you need a new roof, well, Texas has a law that you have to pay a deductible for it. Who pays a deductible? That homeowner pays that deductible for that insurance to have that roof replaced, and your basic maintenance on your house as well too. And let's also mention, higher cost HOA dues as well. They can be increased at just about any time. Mine was increased again this year. It was increased last year. And if somebody's already moving into a neighborhood where it's already significantly high, well, there's nothing saying that it can't go higher that next year or years down the road. And that's, of course, going to affect, affordability as well, too, in that as well. And we know that property tax rates can go up also as well. So some good things to think about. And, we just urge, I know from your standpoint as well, Rich, is that we urge everybody to really just take your time. We're always here for their questions, and, don't overextend themselves in the home purchase process. Go in exactly what they feel comfortable with, but understand too that they kind of have to determine, okay, well, what are the features we want in a home? What's the location? All right, here's what we're pre-approved for. Here's what our estimated payment's going to be. Now, does all this make sense considering the additional fees we'll have associated with homeownership and just your basic quality of life functions out there we're going to do as a family or individually as well too.
Absolutely. You always want to come in with some type of payment budget, right? At least a minimum, a budget just for the house. Some folks that are coming from rent, rents have gone up for the last handful of years. So if we can at least keep that payment somewhat close to rent, or if they have a little bit of a payment increase they can do above that rent, let us know so we can at least have a better determination of what price point we really can do or what you really can do based on those taxes and the insurance.
Right. That's right. Well, Rich, I really appreciate your time. You've been a great wealth of, you're always a great wealth of knowledge and assistance, and you're always here for me and my clients. Really, really appreciate that. We're going to make 2023 another great year in real estate and taking care of our clients and customers. So once again, you're a valuable asset to my real estate business. Can't thank you enough for all you do behind the scenes. I mean, I'm receiving emails and text messages and updates from you at all hours of the day and night, which I really, really love the updates. As you know, I'm a communications type of guy, so I cannot be informed enough or too much, I should say. So yeah, keep those updates coming in, and looking forward to bringing more customers and clients to you, so we can get them in a brand new home and let them enjoy home ownership.
So how can people reach you if they need a real estate agent?
Well, I'm available, proud to say I'm available 7 days a week, 12 months a year. Of course, my direct number is 214-872-0400. I can be reached once again 7 days a week. Very easy to reach. I do answer the phone, and when you call that number, that's my direct line. You're not going to reach some automated voice system. You're not going to reach an assistant, a secretary that wants to know what you're calling about, all that other nonsense. You're going to reach me directly and no one else.
Fantastic. You have a website as well?
Absolutely. It's brownsteadrealestate.com.
Fantastic. And to reach me, you can go to our website, www.alliancemtggroup.net. And then our office lines 214-872-2188 for any questions on purchase loans.
Awesome. We're here to assist folks. Reach out anytime. Love to work with you.
All right. Thanks again, Mike. We'll talk to you soon.
Thank you, Rich.